are you guys continuing to think that you'll just every quarter you'll do another kind of offering to buy more Bitcoin? I mean, is there any sort of schedule there, or it's just kind of whenever the price looks attractive? Or how do you guys determine, as how much you're going to accumulate and when?
We have a treasury strategy and a corporate strategy. So our treasury strategy is we hold $50 million of working capital in US dollars. And so generally we keep that because we're about a $500 million business. And we figure if we have 50 million of working capital in local fiat currencies, that'll cover us 99% of the time. And then the rest of excess cash flow, we sweep into our long-term treasury strategy, which is to buy Bitcoin. So as we generate cash flow, we will generally routinely from time to time buy Bitcoin. And then our corporate strategy is run the enterprise software business and grow it as fast as we can and generate cash flow with it. And then the second strategy is buy and hold Bitcoin. And we will buy and hold Bitcoin through various types of measures. One way to get it is to sweep our cash flows into it. The second way to get it is to issue equity. The third way to buy Bitcoin is to issue convertible debt. The fourth way to buy Bitcoin is to issue secured debt, non-convertible, just senior debt. We've done all those things so far. There may be fifth ways. We may at some point see the formation of Bitcoin-backed securities where you could actually just securitize the bond issuance with the Bitcoin itself and without the cash flows of the company or without equity. So when do we do those things? Well, the answer is when it's accretive to do that. So, if there are times when it's accretive to issue equity, and there are times when it's dilutive to issue equity. There are times when it's accretive to do a convert, and there are times when it isn't. There are times when it would be accretive to do a senior secured financing, and other times when it wouldn't be, and other times when you can't even if you wanted to. And so it depends on the price of MicroStrategy stock. It depends on the price of the futures market. It depends upon the junk bond markets. It depends upon the Bitcoin market. So we're opportunistic and rational in that regard. I would never want to do anything that wouldn't be deemed as accretive by all my classes of security holders. And there are plenty of things you can do that are dilutive at any given time. It's easy to do dilutive financings and dilutive deals. You have to be very thoughtful about doing the accretive ones.
I've been asked many times about, if every pension fund, if every, 401k, if all these entities at some point have 5% of their assets in Bitcoin, have you ever had your team look at what the potential upside could be if that amount of money went into Bitcoin?
Well, I do think that Bitcoin will emerge as one of the basic monetary indexes of the 21st century. And it's demonetizing gold as property. It's demonetizing commercial real estate as property. It's demonetizing the S&P index, the Vanguard 500 as property. It's demonetizing people's homes as property. It's demonetizing savings accounts as property. And it's demonetizing bonds as property, and so all of those are just places people put money to save it over long periods of time. And so if you think about how much money there is that just wants a pure store of value without taking a credit risk, when you hold bonds, you take credit risk to get a store of value. When the bond is yielding 1% interest, right, and the credit risk is 3% of default every year, that becomes return-free risk, right? So if I want to own bonds, I have to take credit risk. If I want to own stock, I have to take execution risk and competitive risk. And if I want to own a pure currency, I have to take inflation risk. And if I want to own real estate, well, then you have to take some kind of liquidity risk and tax risk, right? What happens if the government decides to double the property tax rate on your real estate, or they impair it by saying you can't lease it out anymore, or you can't subdivide it or something? So every one of those forms of property, or like you want to own Picasso's, well, there's risk that people fall out of love with Picasso and there's a new artist. So they all have their own risk. And if people just wanted to minimize their risk and just put their money into a digital property and carry it on their smartphone for the next 100 years and move it from family member to family member and from country to country, right? Then Bitcoin kind of meets that bill. I don't know why that can't become a $100 trillion thing. Like, why not?
Yeah.
So, okay, why can't it be 100 or 200 times bigger than it is right now? It certainly can be bigger than gold, but gold is just one way that people store value for the long term. It's not the most popular. You can make the argument in the past year, right? The most popular way that people found to store value was they migrated their excess capital into equity ETFs, or just the S&P 500, which is up 40%. I mean, that's a very conventional way. But of course, if you live in Argentina or El Salvador or Syria or Lebanon, you don't have that option. So what's your option if you live in a world that you don't have a bank? You have no options but paper currency. And the paper currency for the unbanked is losing 30, 40, 50% of its value a year. So for most of the world, their best option is digital asset on a smartphone, you know, a $40 Android phone. That's your best hope. And I think that increasingly in the Western world, in Western Europe and the United States, Bitcoin will start to be viewed as the risk off asset for the crypto world, which is, you know, and it will start to be viewed as a less risky big tech investment than owning a big tech stock. And as that happens, then it will monetize and it will grow to, it'll be like the next Vanguard 500 or, you know, S&P index, you know, that was a big thing when people just decided to buy the index.
Yeah.
And that's what I see this is. It's like a less risky global monetary index, 24/7, 365. You know, the S&P puts companies into the S&P 500 and takes them out. Right. So it's a index which is a bit controlled by people, you know, and you know, and they kind of doctor it a little bit by putting and taking out things. And it's not really, there's no hope for someone in Beijing or in Pakistan or in Venezuela. You can't buy that. So, so that's how I see Bitcoin. I see it as massive upside as a monetary index.